September is living up to its reputation as a volatile month. ETFs love volatility. It doesn't matter. Risk off, risk on environment. ETFs have solidified themselves as a vehicle of choice to express views. Let's talk about that with Noel Archer. He's the global head of ETFs and investor solutions at AllianceBernstein. And Todd Rosenbluth is the head of research at VettaFi. Noel, a lot of volatility around tech. And I know you have a very interesting fund, actively managed large cap equity ETF. Big holdings I see here in Microsoft, NVIDIA, and Alphabet. This is still where the flows are this year, still in tech. Are we going to continue to see this flows in, tech outperform?
Yeah, look, I think there's obviously a lot of questions which way the market's going to go. I think the numbers on Friday gave a little more fuel to the fire of, okay, is a rate is a rate cut not only imminent, but what's the size of it going to be? But at the end of the day, you want to step back from that, and if you can, take a bit of a longer-term view. And I think in that long-term view, we've continued to see a lot of robust energy in the U.S. markets and in some of these global providers, not just in technology. Technology touches everything that we do in most facets of our life, but there are other industries in play. So we're continuing to see a lot of interest in investing broadly, not only in equities, but in a lot of the flows. Some of that volatility has changed up in fixed income.
And we're looking at how you've done this year. And this has paralleled the S&P 500 actually fairly well. Of course, you have tremendous tech representation in this. Todd, let me ask you about volatilities too. Low volatility ETFs. SPLV is the Invesco low volatility one. They invest in financials, consumer staples, telecom. You got Coca-Cola, you got Berkshire, and these things. What I find interesting is investors don't seem terribly impressed, though. I don't see big flows in consumer staples. I don't see big flows into SPLV this year. And I'm wondering, I mean, I know it's certainly rational to say flows follow prices, but when is that going to turn around? When are we going to see real flows, not just price changes?
Well, you're right. So SPLV has hit another high recently. It's actually performing almost in line with the broader S&P 500 with SPY and IVV and VU this year. But you're also right, we haven't seen the flows. SPLV and the iShares product, USMV, that's the minimum volatility ETF, have not been that popular this year. We've actually seen more money going into quality-oriented ETFs. So Invesco's SPHQ, in iShares, QUAL, we've seen free cash flow ETFs, Victory Shares, VFlow, see strong demand in the month of August. So we think investors are going to sense the volatility that we've seen in September and then start to rotate in if this volatility continues September and October like it traditionally does.
What about that quality overlay, Noel? I mean, we're all traditional guys in the way we grew up listening to Fama French two-factor models. There was beta that mattered. Generally, small cap outperformed big cap over long periods. Generally, value outperformed growth over long periods. Neither of these worked very well in the last 15 years, but this quality overlay, which in my mind, big emphasis on profitability, that seems to have captured investors' imagination.
I think it has. I mean, the quality factors are pretty important, and that plays into some of our strategies. We think about a lot about quality, stability of the price. What are you getting for that? But I think the interesting thing about volatility, like the end of July and the beginning of August seems like ancient history somehow already. It wasn't that long ago, but that's what was a little bit of a wake-up call for some folks, I think, and seeing that and saying, all right, we probably need to think about, how do these allocations fit? We finally started to see some of the rate-sensitive sectors start to get a little bit of play, because people hate to say it, but you sort of forget about volatility until it's there, and then all of a sudden it becomes very front and center. But rather than just think about complete dampening of volatility, trying to think about how can you participate in the markets, maybe keep a little bit of bumpers on either side of it, but still keep this upswing because there still seems to be a lot of momentum at play.
I want to ask you about your actively managed low volatility ETF. You have a very strong exposure to tech here. Can you explain that? I mean, tech to me doesn't seem to go very well with low volatility, and yet here you do have one.
Yeah, I think the way that you want to think about the the low volatility strategy that you're referencing is, again, we're trying to make sure that we are going to participate in the upside and try and cushion on the downside to some degree. So that doesn't mean that you're just going to go into deep value. It doesn't mean that you're going to avoid tech or some growth aspects of it, because you want to have growth at a reasonable price built into it.
Yeah, so here's what's interesting. We just put up the Invesco one, which of course has Berkshire, Coke, Visa, Colgate. Here's yours, low volatility ETF. Microsoft, Alphabet, Apple, Broadcom, United Health. I mean, you get my point. It's a little bit, it's different. And I know you're pointing out, no, there isn't a broad rule about low volatility, but
yeah, I think that
I don't think Microsoft low volatility. I guess that's what I'm trying to get at.
Which is fair, but I think a lot of us grew up in an era when Microsoft sometimes behaved very differently, right? And it's not that this is like some company that doesn't have this great potential to it, or still isn't so impactful in our world. But again, it's a really big company with a lot of different aspects. All I can tell you is you're getting flows into this low volatility ETF. The traditional low vol SPLV is not really getting big inflows this year. So whatever you're doing, if flows is what matters, you're certainly getting it. Even we could bicker about what's low volatility and what's not. Todd, low volatility, high volatility, it doesn't seem to matter in terms of flows. I'm looking at year to date, where we are, ETF assets, flows into equity, flows into fixed income, non-traditional is getting some inflows, active is getting some more inflows. It's really remarkable. It's really kind of incredible. Like low volatility, high volatility, you're still getting inflows no matter what happens, essentially.
Yeah, I mean, well, there's investors that are buying ETFs for strategic reasons, and Vanguard 500 ETF already has set a record for the calendar year, and we have 4 months to go in terms of its overall net inflows this year. But we are starting to see some of the other sectors participate from a flow standpoint, real estate being one of them. We've seen real estate XLRE, which is the real estate select sector spider ETF, VNQ, which is the Vanguard real estate ETF. Those saw net inflows thus far, or in the past month. So we are seeing some of those more defensive sectors that are performing relatively well since the beginning of the third quarter start to see investor
So
demand.
this gets to that question of, does flows follow prices? Because we've seen interest rate sensitive sectors, utilities and real estate, for example, outperform recently, which makes some sense. And I know inflows like in real estate have improved a little bit. But assets under management are still pretty modest in some of these smaller sectors, essentially. Will they see inflows? Will we start seeing more significant inflows as investors take profits in tech and maybe broaden out into other sectors?
I think it's more likely that if we see a sell-off, that those defensive sector ETFs get bid up, as opposed to people using them to outperform, but more to reduce the risk profile. We've also seen the more risk mitigating strategies, the defined outcome products, the ones that have structured protection, Calamos, Innovator ETFs. You guys have those products as well that have come. That's starting to gain traction, and people are not going and building their own sector defensive strategies the way they might have beforehand.